There's a Dutch company that's around 400 years old, and its value is staggering. Think Apple, Microsoft, Amazon, Saudi Aramco. Combine all their market values, and you still wouldn't reach the valuation of this 400-year-old company. When we think of capitalism, wealth creation, and old money, the names that usually come to mind are the Rothschilds or the Rockefellers. Rarely do we think about a quiet Dutch company that completely changed the game. This company created the world's first corporation, the first stock exchange, and the first IPO, and it still exists today. Buckle up. Today, we're diving into the fascinating story of the Dutch East India Company and the House of Orange. A global threat emerges. Let's rewind to 1580, when Spain had just taken over Portugal in a personal union. Suddenly, two global powers were merged under a single monarchy, controlling vast territories across Asia, Africa, and the Americas. For the Dutch, this was a huge threat. At the time, the Dutch were technically part of Spain, but they were fighting for independence. Suddenly, they faced an enemy far larger and more powerful. With Portugal under Spain's crown, it seemed unstoppable. The Dutch knew guns alone wouldn't win this fight, so they developed a new kind of weapon: private capital. The birth of the VOC. In 1602, 7 private trading companies merged to form the VOC, the Dutch East India Company. They traded primarily with the East Indies, modern-day Indonesia, Malaysia, and nearby regions. At first glance, it looked like a regular merchant company, but beneath the surface, it was a machine of economic warfare. Armed ships, private armies, forts across the globe, and its most revolutionary feature was its shares. For the first time, ordinary Dutch citizens could fund imperial expansion and share in its profits. The VOC could scale like no kingdom ever had, without a monarch and without raising taxes. Wealth was no longer tied to land or titles. It was manufactured through markets. The House of Orange enters the stage. Merchants ran the business, but the House of Orange provided the foundation. The House of Orange was a prominent dynasty, but they held no kingdoms at the time. In a merchant-driven republic, their nobility mattered little. They were squeezed from all sides. Amsterdam's elites wanted tighter republican control. Spain wanted the dynasty extinguished, and the house had no land, mines, or inherited wealth to rely on. Faced with fading into irrelevance, the House of Orange adapted. They invested their only remaining resource: capital. While they didn't run the VOC directly, they bankrolled it and tied their future to its success. This gave them strategic leverage in a republic where legacy alone no longer guaranteed power. Stadtholders and the rise of the House of Orange. The VOC quickly grew beyond a normal company. It became a sovereign-like power. But who kept it running and influential? The House of Orange played a key role. Stadtholders, high-ranking officials, and magistrates were often from the House of Orange. Two notable figures were William IV and William V, who served as presidents of both the VOC and the Dutch West India Company, which traded with the Americas. Through these positions, the House of Orange became among the most powerful families in Europe, rising from nobility to something far greater. Their influence was backed not by crowns, but by dividends and financial leverage. The VOC moves like a state. The VOC didn't act like a typical company. It moved like a state. It had armed ships, private armies, and forts across the globe. It could sign treaties, raise armies, capture territories, and govern colonies. With nearly 150 merchant ships, around 50,000 employees, and a private force of 10,000 soldiers, the VOC controlled vast trade networks. At its peak, the VOC was worth more than $7.9 trillion in today's money, more than double the value of today's largest companies like Nvidia. The VOC expands east. From the early 1600s to the mid-1700s, over 1 million Dutch people sailed to Asia, working as sailors, clerks, soldiers, and craftsmen for the VOC. They managed ports, guarded warehouses, negotiated with local rulers, and enforced Dutch interests, sometimes at gunpoint. The VOC's success depended on three pillars: a powerful state charter granting near-sovereign authority, the backing of Amsterdam's financial elite, and strategic support from the House of Orange. The charter and public investment. The VOC's charter gave it full control of Dutch trade in Asia and rights far beyond normal commerce. It could operate like a sovereign state without royal interference. It could print money, enforce laws, and govern colonies. But the most revolutionary innovation was its shares. In August 1602, the VOC offered the world's first ever initial public offering, an IPO. For the first time, ordinary citizens could buy into a global enterprise and share in its profits. This system created a market of speculation and investment far ahead of its time. People could now profit from capital instead of land or titles.
The Amsterdam Stock Exchange and speculation. The VOC's IPO didn't just raise money, it created a new financial system. For the first time in history, ownership in a company could be traded freely through share certificates. Investors were protected by limited liability. If a ship sank or a trade failed, they only lost what they invested. Personal property remained safe. This innovation gave ordinary people confidence to invest, fueling the VOC's expansion. Soon, traders went even further. They began speculating on future values of shares, creating a market of arbitrage, hedging, and speculation, tools that are still used on Wall Street today. The VOC's shares experienced massive growth, from an index value of 100 in 1602 to roughly 1,000 by the 1720s, a tenfold increase. Dutch influence spreads abroad. Dutch financial innovations didn't stay in the Netherlands, they spread across Europe and beyond. The Dutch model influenced Britain, particularly London, which leaned into fast-moving markets. Amsterdam's bank-oriented system cooperated with London's market-oriented system, creating a powerful blend of finance. This foundation later traveled west to the New World, shaping the development of New Amsterdam, which became New York City. William of Orange and the Glorious Revolution. William of Orange, born into the House of Orange-Nassau, became a central figure in spreading Dutch financial ideas abroad. In 1688, England faced a political crisis under King James II. William, married to James's daughter Mary, was invited to intervene. He sailed to England with troops, bringing a mindset that merged capital with governance. This led to the Glorious Revolution, installing William and Mary as joint monarchs, but it wasn't just a political change, it was a financial revolution. The Bank of England was launched. Public credit was created. Government bonds were issued to fund wars. Dutch financial innovations became integrated into British law, shaping modern finance. Dutch legacy in New York. Long before William arrived, Dutch ships had crossed the Atlantic. In 1609, the VOC's Halve Maan reached present-day New York Harbor. In 1624, the Dutch West India Company founded New Amsterdam at the south tip of Manhattan. The city's organized streets, trade networks, and credit systems reflected Dutch influence. Even after the British takeover in 1664, renamed New York, Dutch legal systems, commercial customs, and financial habits persisted, quietly laying the groundwork for the city's future hub as a global financial hub. Cracks in the empire. By the late 1700s, the once mighty VOC began showing serious signs of decline. Rapid expansion had outpaced effective oversight. Corruption started creeping in, with officials more concerned about personal profit than company strategy. Military costs increased as Britain and France became stronger competitors. Despite surviving for nearly 2 centuries, the VOC's internal structure became hollow and decision-making slowed. Eventually, by 1795, the Dutch government nationalized the company, marking the end of an era. From collapse to modern finance. Even though the VOC empire collapsed, its innovations survived. Corporate finance structures became models for modern businesses. Limited liability and publicly traded shares influenced global financial systems. Legal frameworks introduced by the VOC persisted in Europe and beyond. The VOC's approach to capital, governance, and markets shaped the Netherlands' transformation from a seafaring empire to a modern financial powerhouse. The Netherlands today, a financial empire. Today, the Netherlands is a major financial hub. It ranks among the most competitive industrial economies globally. Dutch cities attract foreign capital, with $4.3 trillion in inward investments and $5.2 trillion in outward investments. Dutch holdings abroad exceed $3.5 trillion, a remarkable footprint for a small country. This enduring financial influence can be traced back to VOC-era innovations and the strategic role of the House of Orange-Nassau. The House of Orange-Nassau. The House of Orange-Nassau remains influential. Their role may be ceremonial politically, but their connections in industry and finance are significant. They hold stakes in major companies like Shell and maintain wealth through trusts and investment vehicles. They continue to shape Dutch corporate and financial power, quietly influencing global markets. Modern Dutch giants, Shell. The legacy of VOC-era innovation carried forward into modern Dutch corporations. In 1907, Royal Dutch merged with Shell Transport and Trading Company to form Royal Dutch Shell, a global energy titan. Shell's operations span continents, and its corporate structure echoes VOC foundations. Other Dutch financial institutions, like ABN AMRO and ING, also trace their roots to centuries-old financial practices. The legacy of the VOC is clear. It didn't just build trade empires, it crafted the blueprint for modern finance, corporate governance, and multinational business.
Dutch innovations travel across the world. The innovations of the VOC didn't remain confined to the Netherlands. Dutch financial methods, corporate structures, and stock markets spread to Britain, America, and beyond. The Amsterdam Stock Exchange became a model for trading systems worldwide, influencing markets for centuries to come. Dutch ideas of public credit, transferable shares, and limited liability became the foundation for modern capitalism. Impact on New York. Decades before William of Orange went to England, Dutch ships had already reached North America. In 1624, the Dutch West India Company founded New Amsterdam, modern-day Manhattan. Though the British took over in 1664 and renamed it New York, they retained Dutch urban planning, legal and commercial systems, and financial customs. This meant the DNA of Dutch commerce survived and influenced the rise of New York as a financial hub centuries later. England and the Glorious Revolution. In 1688, William of Orange married Mary and was invited to take the English throne during the Glorious Revolution. He brought Dutch financial expertise, seeing markets as tools for governance. His reign led to founding the Bank of England, introduction of public credit, and government bonds funded by capital markets. Dutch innovations in finance and trade were thus embedded in English institutions, paving the way for modern global finance. Amsterdam and London, twin financial powers. By the 1700s, Amsterdam emphasized banking and public credit. London favored speculation and fast-moving markets. Over time, the two cities cooperated, blending Dutch reliability with British market agility.
This synergy fueled international trade and shaped modern financial systems. The VOC as a model of modern corporations. The VOC was more than a company, it was a sovereign economic power, controlled its own armies, territories, and trade routes, raised capital from ordinary citizens, introduced shareholder rights, limited liability, and secondary markets. Its methods laid the groundwork for multinational corporations, stock exchanges, and modern capitalism globally. Cracks in the empire. By the late 1700s, the VOC's dominance began to weaken. Internal corruption and sluggish decision-making undermined efficiency. Officials prioritized personal gain over the company's long-term success. Rising military costs and competition from Britain and France put enormous pressure on the VOC. Even though the VOC had once ruled the seas and controlled trade across Asia, the company's vast empire became unsustainable. Nationalization and closure. By 1795, the Dutch government stepped in. The VOC was effectively nationalized. A company that had survived for nearly 2 centuries officially ended in 1796. Despite the collapse, the VOC's concepts of corporate governance, finance, and markets survived. VOC legacy in modern finance. Even after its dissolution, VOC innovations transformed legal structures, stock markets, and multinational corporations worldwide. Concepts like limited liability, share trading, and public investment became standard. The Dutch approach influenced financial systems in Britain, America, and beyond. Modern Netherlands as a financial hub. Today, the Netherlands is a global financial hub, a highly competitive economy attracting foreign investment. $4.3 trillion in inward FDI and $5.2 trillion in outward FDI. Dutch holdings abroad exceed $3.5 trillion, reflecting influence far beyond its small population. The House of Orange-Nassau today. The House of Orange continues to wield influence. Although largely ceremonial, they maintain connections in defense, energy, and corporate governance. Hold stakes in companies like Shell through trusts and investment vehicles. They help shape corporate strategies and Dutch industry, preserving centuries of influence. From VOC to modern giants. In 1907, Royal Dutch merged with Shell Transport and Trading Company, forming Royal Dutch Shell, now a global energy titan. Other Dutch companies also trace roots back to VOC-era financial systems. Modern corporations and banks still echo VOC's legal and financial innovations.
Merchants' legacy. The merchants and financiers who ran the VOC left a blueprint that persists today. Their descendants often hold stakes in modern corporations. Some quietly sit on boards, others shape policy through foundations and capital networks. Their names may rarely make headlines, but their financial and organizational systems are everywhere, from oil and banking to logistics. Global corporate architecture. VOC innovations created frameworks still in use. Shareholding allows investors to own parts of companies without running them. Limited liability ensures personal assets are protected from business losses. Secondary markets enable buying and selling of ownership freely. Public investment fuels expansion without relying solely on monarchs or state resources. Influence beyond the Netherlands. Dutch financial systems influenced Europe and the New World. Amsterdam's bank-oriented finance merged with London's market-oriented trading, creating a powerful global model. Dutch practices traveled west, laying the groundwork for New York City as a financial hub. Early Dutch settlements like New Amsterdam, later New York, absorbed Dutch trade and credit customs, forming the base for modern American finance. Royalty meets capital.
The House of Orange exemplifies the merging of capital and nobility. They supported and bankrolled ventures like the VOC, cementing influence beyond land and titles. Their strategic use of capital markets allowed them to retain power without a throne. This approach influenced figures like William of Orange, whose policies later shaped British finance and governance. The Financial Revolution in England. Through William of Orange and Dutch influence, England launched the Bank of England, created public credit, and issued government bonds. Dutch financial innovations became British law, setting the stage for modern Western capitalism. The integration of markets with governance proved that capital could be as powerful as kings. Modern impacts of VOC principles. Even centuries later, VOC principles guide modern business. Multinationals, stock exchanges, and investment systems trace structural roots to VOC-era innovations. Concepts like risk management, corporate governance, and shareholder rights are direct descendants. The VOC demonstrated that markets could scale empires, creating wealth independent of traditional land-based power. Colonial administration and trade networks. The VOC didn't just trade, it administered entire regions. It controlled ports, forts, and settlements across Asia, including Java, Bengal, and Ceylon. Local kingdoms were often subservient to VOC interests, and Dutch governors ruled from Batavia, Jakarta, for over 300 years. The company's trade networks ensured goods, labor, and information flowed efficiently across continents. From trade empire to modern corporations. The Dutch financial and corporate models laid the foundation for modern multinationals. VOC's organizational structure, with boards, shareholders, and managers, became the template for corporations worldwide. Innovations like public offerings, dividends, and limited liability remain core principles in today's businesses. Even after VOC's nationalization in 1796, its methods endured, influencing companies for centuries. The rise of Royal Dutch Shell. The House of Orange continued their strategy of merging capital and royal influence. In 1907, Royal Dutch merged with Shell Transport and Trading Company, creating Royal Dutch Shell. Shell grew into a global energy powerhouse, dominating oil production, refining, and distribution for over a century. Just like VOC, Shell combined financial innovation, strategic investments, and global operations to thrive. Modern Dutch financial power. Today, the Netherlands leverages centuries of VOC-inspired systems. It ranks among the most competitive industrial economies, attracting global capital. Foreign direct investments exceed $4.3 trillion inward and $5.2 trillion outward, showing enormous financial influence. Dutch holdings abroad surpass $3.5 trillion, demonstrating small population, massive global reach. The House of Orange today. The royal family maintains a long shadow over Dutch industry. While largely ceremonial, they remain strategically tied to defense, energy, and corporate governance. They hold stakes in companies like Shell and manage wealth discreetly through trusts and investments. Their involvement ensures that modern Dutch capitalism retains links to its VOC-era roots. Enduring legacy. The VOC's influence is visible in corporate governance structures, financial systems, and stock markets. Multinational operations that manage global trade efficiently, legal and investment frameworks still used worldwide. Essentially, the VOC wrote the blueprint for the modern global economy, and Dutch innovations continue to shape finance centuries later.
Amsterdam and London, a financial partnership. By the 1600s and 1700s, two European financial powerhouses emerged. Amsterdam focused on banks, public credit, and stability. London leaned into speculation, trading, and fast-moving markets.
Over time, their financial elites cooperated closely, merging Dutch reliability with British market innovation. This collaboration shaped modern financial systems, allowing both cities to facilitate international trade, build robust capital markets, create structures that still influence finance today. New Amsterdam, Dutch roots in America. The Dutch influence crossed the Atlantic. In 1624, the Dutch West India Company founded New Amsterdam, now Manhattan. The settlement was organized for commerce with streets, ports, and trade networks designed for efficiency. Though the British captured it in 1664 and renamed it New York, they kept much of the Dutch financial and legal systems intact. These early Dutch systems helped lay the foundation for New York as a financial capital. Credit systems, contract enforcement, and trade practices were inherited. Over time, New York became a global financial hub, blending Dutch and British practices. William of Orange and the Glorious Revolution. Dutch ideas influenced politics too. In 1688, William of Orange sailed to England with troops during a political crisis. Married to Mary, daughter of King James II, William became co-monarch in the Glorious Revolution. His Dutch experience merged capital with governance, showing how capital markets could support political power. Financial innovations carried to England. William's reign introduced Dutch financial models to England: creation of the Bank of England, launch of public credit systems, issuance of government bonds to fund wars via markets. These innovations transformed England's financial system, and the impact is still visible in modern banking, trading, and public finance. Legacy across continents. Dutch corporate and financial ideas spread globally. From Amsterdam to London and New York, markets, contracts, and credit systems were exported. The VOC's legacy lived on in multinational corporations, stock markets, and investment principles. Even long after VOC dissolved, its methods echoed through centuries, shaping modern global commerce. Cracks in the empire. By the late 1700s, the once mighty Dutch East India Company, VOC, began to falter. Rapid expansion outpaced oversight and management. Corruption crept in as officials prioritized personal gain over company growth. Rising military costs and fierce competition from Britain and France strained resources. Despite its vast power, the VOC faced challenges it couldn't fully control. Internal divisions weakened decision-making. Global markets started favoring flexible competitors over monopolies. Nationalization by the Dutch government. In 1795, the VOC could no longer sustain itself as an independent entity. The Dutch government took control and effectively nationalized the company. Founded in 1602 with a 21-year trade monopoly in Asia, the VOC had survived nearly 2 centuries. By 1796, its charter expired, signaling the end of the world's first multinational corporation. The VOC legacy beyond collapse. Even as the VOC dissolved, its influence endured. Its corporate structure and innovations became the blueprint for modern finance. Stock markets, limited liability, multinational operations, and trade systems trace roots back to VOC principles. Legal frameworks, corporate governance models, and investment strategies in the Netherlands and abroad were shaped by VOC practices. Modern-day Netherlands, a financial powerhouse. The Netherlands transitioned from a seafaring empire to a financial empire. It ranks among the most competitive industrial economies in the world, an absolute magnet for global capital with strong foreign direct investment, $4.3 trillion incoming, $5.2 trillion outgoing. Dutch holdings abroad now exceed $3.5 trillion, a massive footprint for a country smaller than California. The House of Orange Nassau today. The House of Orange continues to wield influence. While their crown is ceremonial, their connections remain strategically significant. They maintain stakes in companies like Shell and operate discreetly through trusts and investment vehicles. From defense and energy to corporate governance, they help shape Dutch corporate and financial power. Royal Dutch Shell, a modern legacy. In 1907, the Royal Dutch Company merged with Shell Transport and Trading Company to form Royal Dutch Shell. It dominated global energy for over a century. A Dutch company carrying both capital and royal influence, reflecting VOC principles. Shell's global operations rely on legal protections and corporate architecture originating in the VOC era.
By now, it's clear that the Dutch East India Company, VOC, didn't just trade goods, it traded ideas, power, and influence. The innovations in finance and governance that emerged in Amsterdam created a blueprint that would ripple across the world. Modern stock markets, corporate structures, and public credit all trace their origins back to this era. The House of Orange, once a minor noble family with no throne, transformed itself by aligning with commerce and capital. They realized that wealth created through markets could surpass the power of land, armies, or royal decrees. This approach allowed them to maintain influence for centuries, long after VOC dissolved. The Dutch financial system became a magnet for international investors. Trade, law, and banking were merged in ways that set the stage for the modern global economy. The seeds sown in the 1600s still flourish today in the Netherlands' strong position as a hub of international finance and investment. Even after the VOC ceased to exist in the late 18th century, its legacy endured. Dutch innovation in corporate law, limited liability, and public markets shaped not only Europe but also emerging financial centers across the Atlantic. New York, London, and other cities owe their financial DNA to the early experiments in Amsterdam. The House of Orange continues to wield influence quietly. While the crown is now largely ceremonial, their investments, strategic connections, and participation in key companies maintain their relevance. From energy giants like Royal Dutch Shell to financial institutions, Dutch corporate structures continue to echo VOC-era principles. In conclusion, the story of the VOC and the House of Orange isn't just about a company or a family, it's about the birth of modern capitalism. Through innovation, strategic thinking, and the clever use of capital, they reshaped trade, finance, and global power. Their blueprint remains embedded in the structures that govern our economies today.